2020 has been a time like no other. As the year began, the world was poised for an upswing in economic growth. Just a few weeks later, though, we found ourselves beginning a battle against a global pandemic. The resulting lockdowns triggered the sharpest global recession ever, as well as dramatic moves across financial markets. We saw countries respond individually and not collectively to fight the disease. And we saw the rise of technologies that saved lives and perhaps even the global economy. Then, with COVID-19 still rife, we experienced a U.S. election full of vitriol and anger, followed almost immediately by the potential discovery of an effective vaccine. Processing all of this has been far from easy, and it leaves many big questions swirling around. How soon might the world normalize once more? What does the new Biden administration mean for global investors? I'm David Balin, CIO of Citi Private Bank, and I'm here to offer you some answers. How should you position portfolios for the risks and opportunities of the coming year and beyond? How will the post-COVID world economy unfold? In Outlook 2021, we offer you answers to these and other critical questions. "2020 brought massive distortion to the global economy and everyday life. By contrast, we think that 2021 will be a year of normalization and growth. We expect the release of several vaccines that will ultimately bring the COVID-19 pandemic to an end in the second half of the year. The distribution of these vaccines should enable a sustained recovery in global growth. Large-scale fiscal stimulus should also help drive this new economic cycle, as will very low interest rates. In the U.S., fiscal stimulus may now be smaller, given how likely the government is to be divided. However, U.S. political gridlock also means that large tax increases and legislative blocks on companies are unlikely, which will reassure companies and investors alike. As fiscal stimulus takes hold and COVID retreats, manufacturers worldwide will start refilling their inventories and supply lines. We also expect a wave of pent-up consumer demand for travel and other socially close services like leisure and entertainment. Overall, then, we see major catalysts for global growth and corporate earnings in the coming 12 months. As the new economic cycle accelerates, 2021 is set to be a very different year indeed. The very different conditions we expect in 2021 call for very different portfolios. We want you to be the first to know more about this so you can position your portfolios to benefit from these differences. So how should you be preparing for the economic cycle and post-COVID world? In particular, we expect a rotation away from sectors where businesses benefited from the pandemic and toward sectors that were hardest hit by lockdowns and social distancing. We call the sectors that have held up well during the pandemic COVID defensives. These include online retailers, digital entertainment, and consumer staples. COVID cyclicals, by contrast, include sectors such as hotels, restaurants, airlines, and office REITs. Relative to COVID defensives, COVID cyclical valuations dropped well below their long-term averages. This gives these assets rooms to snap back as the world returns to normal. We see similar potential in small and medium-sized equities globally, as well as in certain emerging markets. We explained how and why in our Exploiting Mean Reversion theme. At the same time, we see a growing challenge from artificially low interest rates alongside higher inflation, a combination known as financial repression. Our advice is to replace certain bonds in your portfolio with a selection of attractively valued income-generating assets from around the world. You can find out where to find these in our Overcoming Financial Repression theme. We then make the case for building exposure to two more unstoppable trends: 5G-driven hyperconnectivity and greening the world. We also recommend exposures to two of our existing themes, the rise of Asia and increasing longevity. We believe these four powerful long-term forces could help reshape business and everyday life as well as your portfolio. While COVID-19's arrival came as a huge shock, its coming departure should not. Our message to you is to prepare now for the post-COVID world and for the next phase of the new economic cycle. This means building portfolios for the future, for what may happen as 2021 unfolds, rather than holding your 2020 portfolios intact. It also means putting excess cash to work. In fact, you should ask yourselves, how much cash do I need to hold in reserve for the next 5 years? And you should invest the rest. And in any case, do not try to time the markets for a more favorable entry point. We've all seen how unsuccessful we are doing that. This is the time for action. It is time to invest for a post-COVID world. Let us show you how.